Welcome back to Instables, everyone. Again, going over our intraday swing and long perspective after last week increasing in inflation for the first time in the last few months. Again, getting an increase in PPI that we had a week and a half ago, giving us our Gravestone Doji, continuing on lower here and continuing on lower with our PCE report that we got again on Thursday. We are now looking to see if we will bounce on our 200-day moving average. Again, if we do test our 200-day moving average, we would be testing a very key level that we did have a bounce from. We did have an area of balance here. We did hold this area of balance. So will we have a possible bounce on our 200-day moving average? I'm going to go over exactly what we're looking for here. Hit the like button if you enjoy, subscribe if you are new to the channel, and if you are a day trader, if you want to see pre-market news that you want to be watching, if you're looking for data sets that you want to be watching, for example, 30 minutes before market open, the market very much does react to certain data sets and you didn't know that they were coming out, or 30 minutes after market open if you guys are trading out the gate movers, or just looking for those major volatile breakouts on news that we mention every single day in the Instables room. Go to instables.com in the description below, and for only $15 a month, you will never miss a breakout alert today. Again, let's jump into this one. So jumping into the daily chart with you guys here, looking at our intraday perspective, looking at our candle structure here to see exactly where we may be headed next. Again, sitting on a gap down, we could assume that we could continue on from this gap down after an indecisive candle. If we happen to open higher, we will possibly continue on lower on a rejection on our 50-day moving average here. So again, keep that in mind that we are cautious to the upside, although we are looking for that possible bounce if we reach our 390 to 392 level here. Not only is this our 200-day moving average, but again, also our prior bounce that we had an area of balance from. We also had a continuation on a gap up from this point. Again, we came back lower. We retested our 20, had our morning star setup here. We continued on higher again, if you guys do remember, on our morning star setup, and then we did hold this level here. So again, we are keeping this 390, 392 level on watch, watching exactly how we test our 200-day moving average going into this week will be key. Again, if we continue on lower, we will be looking for possible hammer candles coming out, looking for that rejection to the downside, possible bounce play here. That will be the better play, the better momentum play. Again, as we are sitting just below our trend line here that we were tracking, if we do possibly continue on below this trend line, then that continuation on lower and that bounce will be that possible confirmation that we will be looking for to either continue on lower on an engulfing candle, or if we are going to continue on with bullish momentum, we will have our 200-day starting to curl up here. We'll have our 50-day continuing on higher as well, and our 20-day curling over here will not continue to curl over and drop below our 50. We will continue on higher, and that is still a possibility. Even if we do continue on lower, we are going to watch out for how we do again hold our 200-day moving average going into this week. That will be key on our weekly chart. Looking at our swing perspective here now, we do have our 20 weekly moving average, looking to see if we will cross above our 50 weekly moving average. If this does happen, we will possibly be looking for that bullish candle setup here, looking for that possible engulfing candle to the upside here for that possible continuation. That is our bullish case scenario. This is why a lot of investors are watching out for that possible continuation still. Again, even though we did drop down below our trend line on our weekly chart, we are still very much just testing, and we very much can still continue on higher here. So again, in my opinion, very cautious to the downside as we could bounce back for that possible continuation on higher. However, to the upside, I definitely still would be careful, making sure that we get that bullish candle structure on the daily chart for that possible swing momentum to the upside. Now looking at our monthly chart again, looking at our long-term momentum, as you guys can see, again, we very much are getting that rejection and wick to the upside. We have not closed this candle quite yet. We have another week till we do close this candle, but one thing that we do have to consider is that we very much are rejecting our 20-month moving average here, and that we do need to make sure we can close above it before we do possibly think we're going to continue on higher. So again, we are not late to any rally. We are not early to any major sell-off. In my opinion, we are very much looking to see how this candle closes, as we are testing a very key resistance at our 20-month moving average that we need to find as support if we're going to continue on higher. And until we do get support, we are very much just testing and assuming that we could possibly just reject for a possible continuation on lower like we had here. So again, we are making sure that we are cautious to the upside still long term. Again, with our EMA lines that we have been tracking, with our 12 and our 26 on our MACD still below here, We have not crossed higher. Until we do cross higher, we are assuming that our momentum to the long side is cautious to the upside. So again, until this does happen, until we do cross higher here, we are not confirmed for any more long-term momentum at this point in time. We are cautious. Again, intraday, we are very much looking to see if we can bounce. In my opinion, swings, we are going to see if we can bounce off of our 200-day moving average here. If we do not, if we get our 200-day moving average here to curl back over, possibly cross down back below our 50-day moving average here, then we will be looking for that simple play in, again, those bearish candle setups, and we will definitely be playing to the downside. Very profitable plays that we will have if that does happen. But again, at this point in time, we are cautious to the downside still, looking to see if we will get that proof of concept to the downside, or if we will bounce back with that long-term and swing-term momentum on our MACDs with our weekly and our monthly chart that shows us that we still could possibly continue. We'll see exactly what happens. Now, again, with that said, if you are a day trader, if you're looking for pre-market news, very volatile breakouts that you want to be watching before market open, go to instables.com in the description below. And for only $15 a month, you will never miss a breakout alert today again. And again, all of you Instables every single day, continuing to stay as consistent as possible in this crazy market is what we'll continue to do. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.